Hey traders, John Fortune here with this week's weekly Forex forecast for the 2nd of December to the 6th of December 2019. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. We're also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a great weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we were looking further advances to the upside in the dollar index. We did make a move to the upside. We made new highs, but we did not take out the target set at the 98.64. In fact, we barely moved anywhere last week. If you look, we actually started to edge our way towards making new highs, and then we dropped down. We finished the week pretty much where we started. So very simply put, going into next week, we're still looking further advances to the upside in the dollar index. If we can get a pullback down towards the key area of broken resistance, looking to turn support at 9800, any pullback in this area is going to be a great chance to start to look for those bullish formations and patterns. We're going to be looking for a move up towards the next key area of resistance to the upside of the target set at the 98.64. And if we can get a breakthrough here, we're going to be looking up towards the next key area of resistance to the upside and target 2 at the 99.37. So just to summarize, as we did not really go anywhere last week, we are still going into this week with a bullish bias on the dollar index. So next market we're going to look at is crude oil. Now, we did have this big sell-off to the downside last week in crude oil. However, we are still making high highs and high lows. We are still structured to the upside in crude oil. We are currently in a range in an uptrend between the 54.99 and the 57.85. So very simply put, going into next week, for anybody looking to trade crude oil, what we'd be looking for is, we're currently sitting at, having tested the 54.99 last week, we're currently sitting at a key area of support that we can start to look for those bullish formations and patterns. Looking up towards the next key area of resistance to the upside and the range top at 57.85. Just to highlight once again in crude oil, as we have done in previous videos, this market is currently very risky because of the choppy correction going on in crude oil. There's nothing wrong with skipping this market and not trading it next week. And in my opinion, there will probably be better setups in other markets than this one next week. So if you are trading crude oil next week, just bear in mind it comes with heightened risk in the current condition that it's in. So next market we're going to look at is euro dollar. Now last week we did come down and take out the target set from last week at the 1.1000. So very simply put, we are looking further declines to the downside in this market next week. If we can get a pullback, and preferably as always if we can come back and retest broken support, turning resistance at the 1.10570, this is going to give us the best risk to reward opportunities down towards the next key area of support to the downside of the target set, the 1.0926. So next market we're going to look at is pound dollar. Now, as we discussed last week, pound dollar is actually structured to the upside, despite the fact we currently have a dollar which is structured to the upside and which is strong as well. We are still looking for this target to be taken out to the upside at the 1.3019. So very simply put, any pullback in this area, and preferably as always if we can come back and retest broken resistance, turning support at the 1.28060. This is going to give us an opportunity to start to look for bullish formations and patterns, and we're going to be looking at initiating longs up towards the next key area of resistance to the upside of the target set at the 1.3019. Now, just to reiterate what we said last week in last week's forecast, which is that although the dollar is structured to the upside and we are looking for dollar strength, we are fully aware that pound dollar to the upside is shorting the dollar, and the dollar is currently strong. So this is why the pound dollar is actually struggling at the moment. It's kind of moving sideways, it's not going up, because we do have a stronger dollar. However, this is going to be a great setup if the dollar starts to weaken, number one. So if we start to see dollar weakness instead of the strength we're looking for next week, this is a good plan B currency to come to and look for those long positions. And two, there is a good chance we start to see pound dollar making its way towards the target anyway, because just because we have a strong dollar, if we have a stronger pound, we're still going to see advances to the upside even if we have a strong dollar. So if the dollar is strong but the British pound is stronger, we will still see this moving to the upside, albeit in a slightly choppy fashion. So next market we're going to look at is US dollar Japanese yen. Now last week we had a fantastic rally to the upside in the US dollar Japanese yen. We started the week sitting at this key area of support we highlighted last week at the 108.35, and you can see from this area we did have a really nice rally to the upside. We started to make our way towards the target set to the upside at the 110.80 last week, but we did point out in last week's video this is unlikely to be made in a single week, And we did point out if you wanted a near-term target to look for the previous highs, and you can see if you've done that from this support level up towards the highs last week was the move in the dollar yen. So very simply put, following on from this rally to the upside last week, we are looking for further advances in this market next week. If we can get a pullback first, and preferably as always if we can come back and retest broken resistance, turning support from the past at the 109.60. This is going to be a fantastic place to once again start to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area resistance, the upside and the target set at the 110.80. So next market we're going to look at is Aussie dollar. Now last week we were looking further declines to the downside in this market, and we are still structured to the downside. So very simply put, going into next week we're looking further declines once again in Aussie dollar. If we can get a pullback and if we can get a retest of broken support turning resistance at the 0.67830, this is going to be a great place going into next week to start to look for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set, the 0.6689. So next market we're going to look at is New Zealand dollar. Now, a number of markets across the board didn't really move last week, especially with that lack of volatility in the dollar index. New Zealand dollar was one of these. It didn't really do much last week. So very simply put, we are still looking for further declines to the downside in this market. We do also sit at the left shoulder of a potential head and shoulders in this pair. So very simply put, going into next week, we're sitting at an area where we are going to start to look for those bearish formations and patterns. And if we get the right kind of bearish formations and patterns in this area, we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set at the 0.6255. So next market we're going to look at is US dollar Swiss franc. Now the move we were looking at in the US dollar Swiss franc was from the 0.98880 highlighted in previous videos up towards the key area of resistance to the upside of the 1.0027. You can see we did end up getting this really nice rally from this area, and we stopped just shy of the targets at the 1.0027. So very simply put, going into next week, we are still looking for further advances to the upside in this market, looking for the target to be taken out at the 1.00270. Any pullback in this area and a retest of broken resistance turning support at the 0.99790 would certainly give us an opportunity once again to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area resistance, the upside and the target set at the 1.0027. And if we can get a break through here, we're going to be looking up towards the next key area resistance, the upside and target 2 at the 1.0049. So next market we're going to look at is US dollar CAD. Now last week we highlighted the 1.32680 as an area to start to look for a bounce to the upside in this market. As we didn't really get any volatility out of the dollar index, we basically moved sideways in this market and we started to form this pennant type shape. We are looking for this to resolve itself to the upside. So very simply put, going into next week, we are now looking from this key area of broken resistance, turning support. We're going to be, once again, for anybody not involved from last week, looking for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area resistance, the upside and the target set from last week at the 1.3347. And if we can get a break through here, we're going to be looking up towards the next key area resistance, the upside and target 2 at the 1.3429. And last but not least, we have gold. Now, last week we started the week in this area and we were looking further declines to the downside towards the target of the 1449.30. We came within a few pips of this target and we started to correct. So very simply put, going into next week, we are still looking for further declines to the downside in gold. We're still looking only at the moment for bearish setups. If we can get a pullback, any pullback in this area is going to start to give us better risk to reward down towards the target. Preferably, as always, if we can come back this time and retest broken support from the past, turning resistance to the 1481.39. This would be the best setup because it would give us the best risk to reward down towards the target. So any pullback in this area, preferably if we can retest broken support, turning resistance, will give us a great chance to start to look once again for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the target set from last week at the 1449.30. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 1433.80. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far, and also those of you who comment on the video, especially on a regular basis. A big thank you to all of you as well. I want to wish you all a fantastic weekend, and I want to wish you all a profitable week next week. The only thing left for me to say, guys, is take care and don't forget to trade safely.